Welcome to the Money Maven Project podcast. If you're here to learn how to obtain freedom over your time and money through real estate investing, you're in the right place. Create the life you want by living with intention and becoming a Maven in mindset, money, and real estate. Now, here's your host, Justin Monk.
Hey, this is Justin Monk with the Money Maven Project podcast. Super excited. We just finished our 50th episode. Now we're starting to do episode 51. So we have an awesome guest to kick that off. We've got Jake Harris on here, who is the author of Catching Knives. We're going to learn a little bit more about that today. And so anyway, yeah, we're super excited to have you on. Why don't you introduce yourself, kind of tell us a little bit about your background, and then we'll dive in.
Well, first, congratulations on 50 episodes. I'm glad that I'm number 51 on the next side of that. So cheers to you. That is a big accomplishment. I think I read somewhere that, I don't know, there's like a gazillion podcasts out there. That's like an official statistic, I think, gazillion. But only like, 8 episodes is like the average of them. Most people fall off and die. And so that's a big, leap to make that to 50. And I'm excited to be on the kicking off to your 100. Again, thank you for the introduction. Yeah, I wrote the book, Catching Knives, a guide to investing in distressed commercial real estate. Similar to you, I started out my journey investing into single family houses. And, I might just be a little bit further down the road or a couple rungs of the ladder ahead of you and some of the other investors. And so it was me outlaying, the last, it's been 17 years, 18 years now that I've been investing into real estate professionally, and some lessons learned, the graveyard, the sitting on the street corner, sobbing, praying to be worth no money, elements of the subprime meltdown, to lessons learned, and then due diligence and other things that I've kind of needed to put together to really, and the way that I trigger this is a mindset shift to the next 100 years of my life. And because I plan on doing this until I die, I also believe that I will live a very, very long life. We all will, because of technology and advancements of that. And so then how do I start putting those pieces together and lay a little bit of that foundational information in the book? Yeah,
that's awesome.
So I was like, your question was, how did I get started in real estate? I was in the Army. Somebody gave me the Rich Dad, Poor Dad book. I was laying on a cot. I was getting, close to finished up, and I was a sergeant and a weapons squad leader. And so a guy threw me a book. Hey, Sarge, you should read this. Sounds like something you might be interested in, because we talked about like, what are we going to do? And Rich Dad, Poor Dad is one of those, like light bulb. So simplistic, but also so paradigm shifting and the aspect of my life. And so there's been a handful of books throughout my life that have re-triggered and recalibrated the next years and decades of my life.
Yeah. That book seems to be a common starting point for a lot of real estate investors, for sure. A lot of entrepreneurs, for sure. So where are you at today? What does life look like for you? What's the business life look like for you?
Yeah. So today I run a private equity real estate company. We primarily are investing into the secondary and tertiary markets, kind of the urban core. It's been kind of an underwriting thesis, call it the last several years and last 4 or 5 years. We put together a distressed kind of flip fund years ago, flipped, 1,300 homes across 23 states. We're not doing a whole lot of that right now.
Right.
It's a hamster wheel that you constantly have to be on. And then there's just not a lot of distress. Single family is, thanks to, Chip and Joanna Gaines, there's everybody's looking to flip houses these days. And the market is super tight. And so call it 5 years ago, 6 years ago, looking at the way that there's just this kind of urban renaissance happening the country over. It wasn't just downtown, San Francisco, LA, New York. It was everywhere. Shreveport, Louisiana, Nashville, Chattanooga, San Antonio, Austin, all these markets were experiencing this really fundamental shift in what their next decade or 2 decades. And so, an overarching, thesis of that is also that technology is bringing formerly functionally obsolescent buildings back into a new limelight. And so I like historic buildings. They were built in the 20s, the 10s, the 20s, the early things when cars didn't really exist. So they didn't have parking associated with them. So they've been discounted and kind of discredited for many, many years. Well, now when you have Uber and Lime scooters and all these other things, connectivity, parking becomes less of a prevalent factor for making your decision in an office space in kind of a downtown area. And so those historic assets are becoming, in what I believe, more valuable over the next 5-10 years because technology is, decoupling it from that parking component that was, locked in. I think smart cars, Tesla self-parking cars, other things like that are all going to continue to erode that away at a faster and faster rate. And so what I'm trying to do is make investments for the future. The history is great for telling you where it was, but really when we're making investments, we want to know what is the future? What's our crystal ball predicting out? And so that kind of where it sits out. It's $200 million worth of assets under management. We're doing some hotels. We're doing some office conversions. We have some office buildings. Rezoning, buying land, rezoning it to higher density mixed use, kind of queuing that up. We're doing some development deals as well. So kind of all across the spectrum on what we deal on deals, primarily in the commercial. And I'd say that's in the $2 to $30 million deal size is our typical deal for us.
That's awesome. And so where do you see, anybody listening right now knows the market is just crazy, and especially in single family. Where do you see the opportunities? You kind of described like that revitalization of some of those towns. Where else should people be looking for opportunities that may not be saturated yet? If there is one, I don't know. Right, the market is absolutely nuts right now. But what would you tell somebody if they were looking for a place to put some effort, put some money?
Well, it really depends on someone's time horizon. And so I don't know, maybe you get this a lot. People's like, "Hey, should I flip this house or should I buy this house?" And I'm like, I don't know. Like, I don't know what the macro view of this is. Should I buy a house right now? I don't know. How long are you going to live there? What's your job outlook? What is your thing? And so it's a difficult question for me to answer without understanding the bigger kind of context in which someone is approaching it, and also where someone is in their journey. If you're just starting out, sometimes it's easier to start a single family house because there's less risk to that. Yeah. But, as you just identified, it's super competitive out there. And so I was like, it may not be the best place to start if you're wanting to learn the process and maybe make money, a profit. So I tend to, and obviously the part of the reason I both wrote the book was I actually thought there was going to be a lot more distress in the market right now. Yeah. COVID was happening. It was early, 2020, the book came out and it was just like the government just threw $20 trillion out the window at anybody and everybody. And I think it really kind of kicked the can down the road. So I believe there's going to be more distress, especially in the commercial space, not necessarily in the single family. So when I look at this, it's supply and demand. We've undersupplied the residential side of the segment of the market so significantly, somewhere maybe 5 million, 6 million residential units short in the United States. Yeah. You're going to have upside trajectory to that until we can cause that to go into some equilibrium on the supply and demand side. So it depends on, are you looking to buy in the next, something now? and exit in the next 2 years or 3 years or 5 years or 10 years, I don't think that's a bad place to be. But if you're looking for a quick, in and out and make something that's a fatter profit, a bigger discount, then you're going to have to move to different asset types, retail, some hospitality, some of these other things. And I tend to gravitate towards the things that other people don't like because there's better opportunities when you're not competing with 57 offers on a multifamily deal. And if you're not the all cash, paying over value, doing those other things, and those people, and not to say that what they're paying is a bad price, but like what's a good deal for you may actually be a terrible deal for me, and vice versa. So I may have made way better systems on a multifamily deal than someone else does. And so they can pay less or they can pay more and their margins be less because they're just a much more efficient system. Yeah. Whereas someone else getting into that has to figure it out. And I think as an early investor or just getting into that, allow yourself more margin for safety, more room to make mistakes and then still create some profit. I kind of outline some of those things of like putting together investment teams, starting to talking to some brokers, establishing if you want to stay local, if you want to go to a different market, all of those things play into it. But then it also, like I said, there's so many other factors. Like, where do you start? Like, I don't know, man. Like, what fires you up? What excites you? Yeah. I know some people super excited about Airbnb stuff, short-term rentals. That's a different path in which you could take. You could still go buy something and you're repurposing and changing the use. So someone looking at it, renting it for $1,500 a month versus Airbnb it for $3,000 a month, totally different things and has different evaluations on it. And finding out the ethos of what you are as an investor is very important. And I like what you talk about on your podcast about mindset, because that plays into the way that you're going to approach investing.
Yeah, right. So tell us a little bit about where does the title Catching Knives come from, and what's around that? So
it's a financial term, as far as it says, avoid catching falling knives. Mm-hmm. As far as you'll see this, it's more so in the stock market. Avoid catching falling knives. Well, so and part of that, I break it down in the book is real estate has scarcity to it. The stock market, Tesla stock drops from, I have no idea where it is, $400 a share to $300 a share. And you're like, don't catch that falling knife because it's falling down in value. But anytime you want to move in and buy stocks, you can pretty much just move in and buy that. And I want to spend $100,000, $1 million or whatever, and you can just move in and buy that stock. Where real estate is scarce, and especially in something like a premise of your hometown or the downtown of this market, there may only be one or two opportunities for several years. Yeah. And so that's why I go and I talk about this is like, sometimes you have to be doing your homework, skating to where the puck is going to be, doing your research on that asset or multiple assets kind of like that for when that opportunity presents itself, that you're able to quickly come out and catch that knife, even though the value may go down more in the future. If you're looking at it coming back up somewhere else, you need to be prepared to do that. And that's kind of what the lessons of things that I'm showcasing. Obviously, if it's subprime meltdown or a REIT meltdown or national bank fallout and there's just distress everywhere, it's a different kind of mindset too, is now you're looking at what am I going to do in the next month, to get in and out of this. I was competing against the Invitation Homes, Blackstone, where they're deploying billions of dollars, but they had a 5-year investment horizon. I was looking at trying to sell this by like Friday. Like two different criterias, and then establishing what is your thought process? How are you underwriting your investment thesis? Where are you planning to exit? And then I give some details in the book is like, you never go broke taking a profit. Sell sometimes too soon because it was your business plan. Like, I'm going to buy it here and I'm going to sell it at a 25% margin from there and I'm going to exit out. I got stuck in seeing the market go up so fast, month after month after month. I was like, you know what? I'm just going to start holding on to some of these houses. It has a little bit of negative cash flow. It's fine. It's totally going to work out. Well, then the market corrected and crashed. And I was like, oh, this is not fine. This is really bad. And that's where it kind of got to that point that I discussed of sitting on the street curb down in Tucson. Dear Lord, can I be worth no money? Start over at zero. Like, that would be a great place to be, is kind of what I was, because I didn't have the systems. I didn't have the understanding. I didn't have a business plan put together.
So you're advocating for being aware, having the plan, and having enough figured out so that when you do notice these deals, even though they might be very scarce, you'll be able to recognize them, catch the falling knife in such a way that it's safe, and you can make a deal out of it. You can make a project out of it to make some money. Is that kind of the premise?
Yeah. And that's also, I know everybody's kind of got the FOMO, they want to do a deal right now, just jump in. Some of that has some value to it as far as, because you're going to learn by doing deals way more quickly. But people don't have to do what I did. You don't have to go get wiped out in a correction. I learned a lot in that. And that's part of the reason I wrote the book was, take some of the lessons I learned. Don't do what I did. Like, some of these things were stupid. And I'm trying to give you a guide to that, is like, you don't have to repeat my mistakes to learn those lessons. You can read it in a book. And that's, to me, was the big unlocking, the unleashing of the next level, was leverage. And I talk about leverage not from the typical standpoint of real estate investors, is leverage of using a mortgage and finance, but leverage of using other people, their efforts, having an investment team, leverage of using other people's knowledge and their mistakes, that you don't have to go repeat those. Don't reinvent the wheel. Like, I don't know how many times you've heard of that, like, don't reinvent the wheel, but we go do and be like, well, I'm smarter than other people. Oh, I have to do it and figure it out myself. That's what, and so when I look at that, and what I'll bring it back to is the leverage, is people's books are oftentimes like a decade or two of their experiences condensed down to like 3 hours.
Yeah.
It takes you 3-4 hours. Leverage is the biggest thing that you can ever tap into that exponentially moves you to next levels of the game, from finance, from other people's time, to other people's knowledge, that's going to move you 10, 20 years ahead. If you have access to people, and these podcasts are amazing for getting snippets of it, but then books are, in my opinion, the biggest leverage of people's time, 10, 20 years of their efforts condensed down to 3 hours.
No, that's super profound. I love the idea of leveraging other people's knowledge, other people's experience, leveraging other people's even their failures and the lessons they've learned from it. That's huge. I don't think we've talked about that enough on the podcast. So I definitely agree with that. There's so much knowledge out there, but I will say there's a lot of education and opportunity to learn out there, and books and things like that. But not many people, at least that I follow and pay attention to on social media, not many people have been doing it as long as you've been doing it. 20 years, right?
Pretty close. Yeah. I think it was 2003 was my first deal, and I did some commercial construction before that. So we're getting close to 20 years.
Yeah. So I think there's something to be said with that much time in business versus somebody that's, whatever, they flipped 100 houses over the last 3 or 4 years, and they're sharing their journey. I think there's value there, but I think that the time in business that you have is definitely, there's going to be more value there, I believe, and greater leverage to stay with that term. That's awesome. Give us an example of one of your favorite deals that you've done recently in that niche space of and kind of walk us through how you found it, how it came about, what the numbers kind of look like. And give the listeners an example of what you're doing.
Yeah. So I'm going to give you kind of, it's a 1A, 1B kind of deal.
Mm-hmm.
There are 2 opportunity zone deals that I'm working on right now. One that's already been funded in a hotel that we're doing right now. One was, it's an office building, historic office building, 10 stories down on the Riverwalk in San Antonio. Also the parking garage. I've been chasing this deal for 4 years. So part of it was I went and researched all the assets in this market. And I looked at, and I get like super geeky into like the research, probably from the days of doing foreclosures, is like I would be digging through tax records and title reports for hundreds and hundreds of properties every single day. And so what I did is I said, okay, here's the area in which I'm going to research. And then I went through and then started kind of categorizing owners, where they own them, were they out of town owners, why did they own that? Did they start categorizing them to other segments? And then what I would find is outliers, is like, why does this hotel group own this office building? It's not a hotel, it's an office building. So it's an outlier. Like that may have potential of something that could sell at some point in the future. Same thing, an oil and gas group out of Fort Worth that owned this office building in San Antonio. This is the only asset they owned in San Antonio. And it was kind of like, also when you have private equity funds, they have like a life cycle to them, a 5-year, 7-year, 10-year. So when you have outside of those parameters, they're much more willing to sell because now they're trying to harvest some of their gains after that time period. So tracking down who owned it, where their mailing address was, they're not local to the market. And I started like pinging them like, hey, I'm interested in this asset. If you ever sell this building, let me know. If you're ever, discussing, I ended up buying the property right next to it, a piece of land for an opportunity zone hotel on the Riverwalk in San Antonio. We're doing a new ground up boutique, kind of luxury boutique space there. As I was kind of reconnecting this one building that I've been chasing down for several years, I was having to get some use agreements because, hey, we're going to be doing construction, literally on the parting wall, and be like, again, kind of pinging them, hey, if you're ever interested in selling. And they went, you know what? We are interested in selling. And so what happened is, just by doing activity and creating, knowing that I bought the property right next door to them, they said, hey, this probably makes sense. This is the best seller, or buyer into the market. And we were able to kind of strike a deal. That took me 4 years to kind of ultimately track down. It actually almost died during COVID because we were set to close in March or maybe April 1st of, in 2020.
Yeah.
And the lender blew up on us. Like we had signed loan documents on Friday on like a $18 million loan. Mm-hmm. We're going through everything. And then like the attorneys went quiet in the afternoon. There was like some signature page need to be corrected. And this is like a 200-page, 300-page loan document. And it's like, this is not good. Mm-hmm. We knew what was going on. We knew there was a lot of calamity in the market. There was, deals falling apart. And we were racing to try to get to the finish line before the proverbial, music stopped.
Yeah.
The lender said, hey, we've been getting margin called all week. And we got margin called and we got our line frozen, our future warehouse line frozen and our other things. And so we can't do your loan. And we were supposed to close on Monday.
Yeah.
Like they've already evidenced over, like the tenants are going to start mailing us checks because Monday's the 1st. And, I have $1 million hard on this deal. Like, and we're outside of contingent, like we're signing loan documents, like, oh my gosh.
Yeah. Holy cow.
Oh my gosh. Like, what do I do? And I went home, which was supposed to be a celebration on Friday. I went home. My wife's like, you don't seem super happy. This deal that you've been working on for 4 years and then through debating and everything else, closing. Today was the closing day. Like, I was like, I think I may have just lost $1 million. And it was like, wow. And my wife, she is so awesome. I love her. She's amazing. She's like, well, what else could you have done? And I was like, I don't know. And so she's like, well, I guess you'll just have to, go in on Monday and fight the good fight. And I was like, yeah, I guess so. And it was just that kind of like peace of mind that like my wife supports me and is my partner. And like, I think God put her on planet Earth to like balance me out. And it just gave me that like, okay, we're just going to figure it out. We're going to take one step at a time. Ultimately, we're able to extend that escrow 4 months because we were like, we don't know what's going on. We have to go find a new lender. Yeah. I don't know. Like, and they're like, we get it.
Yeah.
Things are real weird out there. And
thank goodness. Wow.
So we closed the deal. We're doing construction. We're turning it into 63 apartments on the Riverwalk in San Antonio. Yeah. So part of me, and the reason I highlighted that as one of my favorite deals right now is because there's all layers of adversity. It took a long time chasing it down. It almost got killed during COVID, the complexity of it, but we just persevered and kept pushing through. And because we're kind of prepared to do that with the team, and it is not to my benefit. Like I'm not that smart, like I'm not that skilled, but putting in those action steps, putting in that hard work for the long enough period of time and just not quitting. Also, it's not done. It's a 10-year investment that we're being a part of. So, I mean, it's still to be played out of what that final, trajectory is. But so far we've been able to kind of push through, and it's an awesome building. It's really cool. And so that's what I'm most excited about is those kind of two deals, 1A, 1B.
That's so cool. And I love that you can say that the building is cool. Like you're passionate about these historic buildings and the projects and stuff, because that keeps you motivated, I'm sure. Whereas, if you're just a straight up multifamily, like, yeah, it's another 100 unit, complex, like what you do. But the where you're at, what you're focused on is pretty cool. And there's obviously some cool buildings that you can be doing deals with, which is awesome. So say we've got a listener that is like, hey, I like what Jake's doing. I like the idea of the redevelopment and kind of taking some of these old buildings and turning them into something awesome. Where would you tell them to start if that's, maybe they've done a few single family deals or whatever, how would you tell them to start getting into the commercial side of things?
So the big thing, besides
read the book,
buying my book, shameless plug there, but you know what? It's the same amount of work to flip a house as it is to flip a building. It's the same mechanisms, it's the same step, it's the same procedures. And so I don't care if you're doing a $100,000 property or a $50 million building, the overall systems and how you're going to do that properly is essentially the same. And so part of, again, like we talked about, like, where should somebody start? Well, it kind of depends on what their skill sets are. And like, what are you good at? Are you good at raising money, being a salesperson and helping to share the vision? Are you good? Do you have experience in construction? Do you have, maybe you're an attorney, maybe, something else. You're a doctor that have other high net worth individual people that you could club together. And so like, find out like what you're already naturally inclined as far as the way, because there's going to be multiple things that you need to fill out. And then you can add in whoever else you need to make that deal successful. If you know nothing about construction, great, bring on a contractor, either to part of the deal or to hire them as a consultant, an attorney, an appraiser, a broker. Like all of these other people can be filled out to establish your team. If you're starting brand new and you know nothing about anything real estate or commercial, that's fine too. But just understand like, okay, I'm going to need to be the general manager that coordinates herd all these goats towards this trajectory, and someone needs to be the visionary. And I hope that, that person is kind of driving this bus, is that visionary, or it may be a spouse or partner or somebody else in the deal. And that's where they can be. What are you already naturally skilled at? What do you always kind of have a vision at? And I'll give you some insight to me that was a big kind of, mind blown moment. So I went back to school. I went to and got a grad school and got a degree in international real estate and finance. And so I was out there and I was like, I'm going to do this many and these hundreds of millions of dollars of deals. And, and then I'm going to build a skyscraper at some point. Like that's, I have a vision of this, building a skyscraper. And I was in grad school down in Miami at FIU. It was a fantastic, real estate program. But there was a kid that I kind of connected up with. I say kid because he was like late 20s, maybe early 30s. I think it was early 30s when I met him. And they were talking about he built this 32-story skyscraper in Miami Beach and made like $30 million. And I was just like, wow, that's amazing. Like, how did you do this? Part of the thing. And he's like, I just came over here. And so this is, post this deal a couple years ago. I had no money. I've never done construction. I have no experience this. I just went out, put an offer on the piece of land for what they were asking for it. And then down the street, there was another architect and a contractor doing another project down the street. So I just hired them and said, design me a skyscraper. And the contractor, what's the price to do this skyscraper? And they said, it's this. And then I went out and I was like, okay, the lender, like, here's the thing, here's the price, here's the stuff. How much do I need? And then I just went out and started talking to people in Miami and they put money into the deal and invested into it. And then when the cost was $75 million total in cost, and then I just sold it and listed it for more than that for the condos. And I sold them for $125 million. So I pay back the investors. I think I made $30 million. And I was just sitting there and he was like, from zero, coming to this country, no money, no credit score, no experience, no anything, to doing $100 million deal. He didn't do a market study. He didn't, say what are rent comps, what are values, what are other things like that. He just did it and created action. And I was just standing there like, I can't believe this person just did this thing. Like, I've been building up for 20 years to try to do these things because I put my own limitations in my head. All limits that every one of us experience are self-limitations. Self-limitation. This kid just came to this country and says, I want to go do this, and just did it. I think he subsequently lost like 20 million on his next deal because he didn't have like any systems in place or anything. But it doesn't matter. Like, it was, again, just by creating action and not having limits, you could go do that as the first deal you've ever done. And it was like,
it's so
blow my mind.
Yeah. It's really that simple. I mean, it's complex, but it's really that simple at the end of the day. That's a great example. It's a great story. So, okay. So what do you see that separates the people that succeed, whether it's in commercial real estate or whatever endeavor they're in? What's the characteristic or habit that you see in somebody, in the people that succeed versus those that struggle to get things done?
Well, I think, to that last story is action. Action. So part of the thing is, if you're making progress, I don't care what it is, you can be successful. And then it's just like, oftentimes, not quitting. Like, so just creating action. And it's hard to beat someone that never gives up. Like that whole quote, and I don't know who said that, Babe Ruth or Yogi Berra or, Winston Churchill. I don't know who it was, but someone just says it's hard to beat someone that never gives up. And so to me, that was also tapped into my own natural inclination. And so part of what we talked about earlier, what are you naturally, what's your MO? And I was like, using some of your makeup of who you are as a person is one of the best things to establish your investment criteria or the way that you approach a deal. Because when you're more tapping into what you're naturally already inclined to do, it becomes easier to become that's what you do, because it establishes kind of your habits. When you're trying to get I think Atomic Habits is an amazing book that everybody should read, like James Clear. But like, if you were to try to hack that, is I've been told by my parents, and other people that I'm stubborn. And they're like, you're just stubborn. So that's great because I'm not susceptible to peer pressure, like other people doing stuff. Like, I don't care what other people are doing. So, but what it was is my mom gave me this advice when I was maybe like a teenager. She's like, or maybe, in my 20s, which is like, why don't you use your stubbornness to help you, lose some weight or to do those other things? And so it was a mental shift of using that in what you may think or society says is a negative to be your superpower. And so then it was just like, I don't ever give up. I'm stubborn. Like, I don't care. Like, I work out every single day. Broken leg, who cares? I work out, do the things, work out every day. And so what it does is using who I am as a person to overlay that into the systems that I'm going to be building out, and then finding out what I suck at. Like, after, I can do the first 90% divisions, and then the last nitty gritty and the last white blue tape kind of thing. Like, I'm kind of on the next project. And I was like, I need somebody that does that last 10% because I suck at that. And that's the things that I try to tell people to do. And at least that's from my own experiences where I've found the best success is finding out what I'm already pretty good at and doubling down on that and find other people for the weaknesses that I suck at.
This is a super profound mindset shift. I think people need to listen up here because there's so much content out there on social media and the self-development books that's geared towards, maybe they don't do it on purpose, but it's like, hey, you have this problem or this weakness in your personality. Here's a book about how to fix it. And I think you nailed it on the head where, no, not necessarily. Like, you were blessed with certain gifts and talents and personality characteristics. Just focus on, I think we would be well off just to focus on strengthening our strengths and utilizing what we have rather than getting so wrapped up in, well, I'm not good at this, so I'm going to spend some time getting better at it. I mean, there always might be some of that, but why don't we say, well, I'm really good at sales, or I'm really good at talking with people. And so maybe your thing is raising the money for the project, but not swinging the hammer. And don't go buy a course on how to estimate rehab and do rehab. Like, go figure out how to continue to raise money. Like, I think, and I'm sure there's always a mixture of things, but I think we spend way too much time trying to fix ourselves or our weaknesses, and not enough time just saying, these are my superpowers. I'm going to take over the world using these superpowers, and I'm going to make them stronger and better. And I don't think we've ever made that particular point on any podcast episode. So I'm glad we're there. I think that's super profound. Thank you.
No, and I think to me, again, leveraging people's book, it was The Hard Things About Hard Things. A book about startup kind of thing. Ben Horowitz is the author of it. And he talked about it is he's hiring like this sales manager, and the guy kind of cusses like a sailor. He doesn't look like a sales manager. He's a little bit, I think, overweight, but part of the thing, but like everywhere he's ever been, he's had like killer sales team because he's really good at training and putting together systems. But like the board that he was kind of pitching to was like, we want good looking Harvard MBA, guy, that's got all these, big four experiences. And he's like, one, we're a startup. We don't have the budget for that. Secondarily, like that, we would be working for that guy if that is the case. But this guy's super good at what he does. And we're not looking for the most average person. We want a surgeon. We want a laser focus. And so to me, that's exactly what you just said, and kind of, think, what are you really awesome at? Go do more of what you're awesome at. There's lots of things that I suck at. I know I tell my wife this, it's a shock that I'm not perfect at everything, that I am flawed. And she's like, yes, I actually do know that. So it's like, but again, I'm just going to kind of, and I mention this again because the mindset is kind of, other than if you're like can't function in society, you don't need to focus on those things that you're not really that good at, and just kind of double down, triple down, quadruple down on what you're really, really good at, because that's what the world needs, is more people that are living their purpose and their passion, and that they're super and fired up by that one thing or two things, and then dive into that. I don't care if you don't know how to read and write, but if you're super awesome at this, of raising capital, awesome. Like that, you can't dress yourself, but you're really good at engineering a mechanical and electrical system for a building. Awesome. I don't care. And I think that is what is coming around in society right now, is they're going to reward people that are really, really good at those one things.
Love that. Oh, that's super profound. Okay, so we're gonna shift into the last segment. I'm still fleshing out the name of this segment, but it's kind of the success paradox breakdown. Because what I've noticed is there's a lot of dichotomy or paradoxes where people say, well, you've got to grind and hustle, and versus, well, you got to slow down and enjoy the journey too. There's always this like almost contradicting advice out there on social media and in books and things like that. And so this segment is where I propose a paradox to you, and I asked you to kind of interpret it, break it down, tell us how you make sense of the paradox. So the paradox that I think I'm going to pick for you, because of some of the things we've discussed, is, and the fact that you've been doing this for 20 years, is how do you balance being patient but also pushing and not getting frustrated with how long sometimes it takes? You mentioned a deal that you had your eye on for 4 years, and it still probably took longer than you thought. So, because there's this mentality out there of like, man, just get up at 3:30 in the morning, and you got to push, and you got to put in extra hours, and Elon Musk tells you got to work 100-hour weeks. But there's also, and I think sometimes that leads to a big sense of frustration because it's not happening as fast as you think it's going to happen. So how do you have patience? But how do you have not too much patience that you're also not pushing the gas, trying to go somewhere? So that's the paradox I propose to you. How do you break that down for us?
Yeah, and so that's the question I probably ask myself too. Dear Lord, let me have the patience to wait on the things that I'm not, supposed to be pursuing, and to know the difference between those things. Here is at least, and I'll give you, I don't know what the right answer is. I'll give you kind of what my experience has been. I think, obviously taking action towards a certain direction, creating some goals are great to establish where you want to see your dream life, which is interesting. We actually broke down kind of one of the things is, what does your dream life cost? Like, most people don't actually take the time to define what their dream life cost. Be like, I want to spend a month, a year in an Italian villa, and I want to have a Ferrari and, 6-pack abs and, whatever. Well, what happens is when you actually fully bake your vivid vision of your life, the things that you can create progress towards that holistic life. And so where I was very myopically focused on a dollar amount of being a millionaire before 30, I was very bankrupt in other aspects of my life. And so I feel like it was a blessing to absolutely get crushed in a financial sense that caused this revelation that there's so much more to life than money. Money's fake. It is a trust in a system of paper that, and if you actually study money and the psychology of money and the history of money and those other things, it's a trust into a system, and it is made up.
Yeah,
it's fake.
Yeah.
And so, but what happens is, what's not fake? Family. your kids, your relationships with your parents, your siblings, all these other things. And those experiences are not fake. And there's time is real. And so to me was an understanding, I'm kind of bringing this together for balance is, so once you can define what your dream life is, then it becomes easier to know and create kind of an action plan that you're making progress a little bit at a way towards this bigger dream life. And what actually happens is oftentimes when I get close, I put together these 3-year visions of this is my life in 3 years, is that once I actually get to like an area where I know I can achieve that goal and I'm starting close, I got to move the goal line. It's actually not the goal that I'm after. It's the journey into becoming a better version of myself over again, year over year over year. Mm-hmm. And so I found that the action, I'm creating action steps towards this bigger goal gives me fulfillment as a human, but then also to not force deals or things that are not meant to be. Because I am persistent and sometimes clever with stuff, I can figure out ways. If there's not the doors closed, go through the window. If the window's closed, go over the wall, dig under the wall, bash down the wall, do those other things. But what I've also found is deals that are meant to happen kind of happen very fluidly when they're meant to happen. Not to say that every deal is going to be easy or every partnership's going to be easy. There's maybe lessons that need to be learned before you can engage to the next level. I call it video game. I use books again a lot because that has been the biggest discovery for me in the last probably 10 years is this leveraging of knowledge. So Obstacle is the Way by Ryan Holiday is one of those things where you're at this level of life until you discover you can't go on to the next level of your life. I think creating some of those action steps, you have those limitations mostly, and we talked about this earlier, of your own self-limiting beliefs that are preventing you from going to that next level. You then, the more truthful you are with yourself, saying that you're going to do something and you actually do it, opens your kind of persona up to these next levels. And that requires typically action. I'm going to lose weight, so I am going to do this. I'm going to work out every day. And then if you start working out every day, what happens is that opens up your mindset, your body, your universe, God, shining down lights and opportunities to go to those next levels, and then being patient and prepared for when those opportunities present themselves.
That's perfect. Yeah, that's huge. I think you nailed it. I think action is the part of the paradox where we're pushing, right? We're always doing something and we're doing something to progress. But then the patience part is not forcing it to fit into a timetable or a box that we have assumed is the right thing, right? Because sometimes we think it needs to fit in a certain box, but we don't know what we don't know. And as we learn, we're like, oh, actually, it's supposed to look like this. My life is actually supposed to look like this. And so it's funny what we try and make happen, what we force, where it's not actually supposed to be an opportunity or a deal or whatever. So I think that's perfect, right? Not forcing it, but just taking consistent action. You can go to the gym and you can put 300 pounds on the barbell and force it, but it's not going to get you in shape. But if you do consistent action, start at the appropriate place, have a plan, have a system, have support, and track your progress, then you're going to achieve your destination. Jake, I think that was
part of it. Like you said, it's the journey, not necessarily the destination.
Yeah. Oh, yeah. You go to the gym oftentimes for what happens right away, like the endorphins and the struggle and the stress release. Not necessarily when you go home or after a month or 3 months later you go on vacation, you look ripped in the mirror. Like that's always great, but it's that daily benefit of it that we're actually after. And I always say one of my favorite things that I always tell myself is to slow down and enjoy the journey, like be patient with things and just enjoy things, but also live life in such a way that you're fitting in as many moments as you can. So slow down and enjoy the moments, but live in a way that you fit in as many moments as you can without sacrificing the quality of those moments. And I think that's kind of a paradox, but it's a balance of, hey, be patient with it, but also always be active and moving and trying to figure out how you can achieve different things in life. So Jake, that was a perfect explanation. I think that's a great note to finish off on. How do people find you and learn more about you? Where can they follow you?
So I'm most active on Instagram. So jake.realestate. So that's at jake.realestate, all spelled out. The dot is the actual period, not spelled out dot. Harris-Bay is the company website. Catchknives.com is where you can go find the book, and we actually have I have a blog out there, and we're starting to put out some new content, some YouTube channels, some other things. That's probably the best way to get access to the most information. But it kind of just depends. We're now pushing LinkedIn and other areas. Jake Harris is pretty common, but you'll see the knives and the catching, other things, which is interesting. With all their social media filter people, they actually said my catching knives was promoting violence. And put down many of my posts at first. They're like, how dare you promote violent acts? And I was like, it's catching knives. It's a terminology. Yeah. Please Instagram, please LinkedIn.
Been around for decades. Awesome. Okay, well, perfect. We will have those details in the show notes here so you can track Jake down, follow him along, grab his book. I'm super intrigued and leverage Jake's 20 years of knowledge and experience by reading the book. What is it? A couple hundred pages, 208 pages. So should be able to sit down and read that in a weekend. And now you know all that Jake knows, hopefully, right? That's the goal. But,
let's hope probably more so than that. I blacked out when parts of it, and I was reading it back, and I was just like, wow, this sounds really clever. Who wrote this?
Who wrote this book?
I do these podcasts and speaking engagements. I kind of don't know. I walk off stage and I'm like, what did I say? And they're like, oh, it's really good. And I was like, okay, I have no idea what I just said.
That's when you know you're in the zone. Oh man, awesome. Jake, this has been a great conversation. Super enlightening. I believe we touched on some really cool topics. And I appreciate you taking the time to be on, man. Appreciate it. Thank you.
Awesome. Cheers, Justin. Look forward to sharing this out to the world with you.
Thanks for listening to the Money Maven Project podcast. A true Maven shares knowledge with others, so be sure to share this podcast and leave a review. Thanks so much, and until next time, live life with intention.